Elena Tedesco, thanks a lot for joining me at the Finews studio. Today we are talking about impact investing. First of all, could you tell us what that is?
Yes, sure. Impact investing is the tip of the iceberg, if you want, when it comes to ESG investing. It goes beyond the earlier approaches of integration and engagement, and also the less rigorous ones of thematic. And the idea is to invest in companies that offer solutions for the problems we have in our society, both on the environmental and social front. And the definition of what's good for society comes from the work done by the United Nations that set the Sustainable Development Goals, a set of 17 goals that are the framework for impact investing. So it's a combination of dual promise of financial returns and positive impact. The positive impact is generally measured using some KPIs, so it's something that can be tracked. And impact investing generally is classified as Article 9 under the European regulation SFRD because clearly is more rigorous than other types of approaches.
From an investor's view, which sectors do you find most promising and why?
We like a lot a couple of sectors, and we generally talk about impact pillars with a sort of thematic approach. And the first one, I would say, is something that we call like sustainable cities, that basically refer to the fact that we have issues with the buildings we live in. If you think of the carbon emissions they produce because of poor insulation or poor heating systems, they're responsible for nearly a third of the global emissions. So there's a significant gap there, significant opportunity at the same time, because we can address that with products and services that do that. And there's a very strong backing by politicians on this. For instance, in the EU, we got the program, Fit for 55, that has identified several measures that are tailwinds, basically, for this segment. In sustainable cities, we also have the theme of mobility, and again, the transport sector is responsible for a significant portion of emissions, about more than 20% at global scale. They mainly come from road transportation, so solutions that improve transportation because of railways, for instance, or because of electric vehicles are some interesting areas for us to invest in. And that's in the theme of sustainable cities. I would say another impact theme for us from an investment perspective is the healthcare sector, and we generally look at companies that offer solutions in terms of improving affordability. I'm thinking, sorry, go ahead.
Do investors actually have to give up performance because of focusing on impact themes?
I would say not really. I mean, obviously, the assumption is that given that it's a dual mandate, the framework is more constrained. But if you look at the evidence from the funds that have been doing this job for a while, there's no evidence of underperformance. And we generally look at our peer group, and there's a lot of data, historical data that you can look at, especially for environmental funds, because there's been a focus for over a decade now. So we can look at the peer group performance over a number of different years and time frames, and a lot of funds within this peer group, Morningstar Ecology category, outperform the global equity benchmark. Obviously, some others don't, but that's the nature of the game at the end of the day.
How can investors measure that impact?
We use some KPIs to measure the impact on the different pillars. There's a common denominator that we call the purity factor, and in essence is the percentage of revenues that each company and then the fund in aggregate can generate from a product or service that address a specific need identified by the United Nations SDGs. So percentage of revenue is one type of measure. The second type is more specific to the type of company or sector that we invest in. And for instance, we do a lot of work to track the emissions that are avoided because a company offering a solution that then enables a transformation to a lower carbon economy. That can be the case of energy saving products, for instance. This is an example on the environmental front. And on the social front, we can measure number of patients treated or the pricing of the treatment of things, number of students, etc. So these are more specific indicators, sector-specific indicators, as opposed to the percentage of revenue that is a common denominator across the fund.
Talking about impact investing, what is actually the size of this market today?
It's a growing market, and now we are about over 40 billion euros in AUM. But if you look at the numbers, a few years ago, in 2018, it was just over 10. So it has quadrupled in a very short period of time, and we believe there's a significant growth because, going back to what we said earlier about performance, investors do not have to sacrifice performance, but can generate both financial returns and positive impact in the society. So it seems a no-brainer, and surely there's a lot of pressure from politicians' point of view, incentives, companies want to cut their emissions, growing opportunities to invest in and make money, basically.
Elena Tedesco, thank you very much for this very interesting interview.
Thank you.